Banks with Information Age Financial Solutions, coming within a great article I found from Kiplinger.com. Of course, it's not a website that I visit frequently, but the article caught my attention, and as always, I want to present that to everybody I can. The myths of passive real estate investing. Now, I've been in real estate since 1999. I've had the ups and downs, been through the crash in 2008, and learned a lot and continue to learn at that point. And I still, when I see articles like this that give just a different perspective for people, because many people weren't around through the 2008 crash and saw that and how complete businesses were wiped out, and it's just the whole world was in a completely different space. And many people are functioning from after that time, and they don't have enough history to go back forward to see how things can change. And this article kind of puts into real estate because it's like a new religion now. Everybody says, well, I want to get into real estate and I want to get passive income. And they need to hear the other side. It's always important to see that at base. So I'm going to dive right in. As always, I'm going to put a link inside the description. The myths of passive real estate investing. Owning income producing rental property may sound like an easy way to earn returns to many investors, but the reality can be very different from the dream. In my financial planning firm, we focus on serving clients in their 30s to their 50s. And we see firsthand how popular the idea that real estate is a way to get rich relatively quick is. That would be fine if real estate was a no-brainer passive income maker the way so many people think it is. The problem is that the narrative doesn't line up with reality. While real estate can be a good investment, that statement comes with a laundry list of caveats. All the ifs and buts that surround it mean that investing in real estate, especially with the goal of generating passive income, is more of a myth than a viable strategy for most people who simply want an easier, more exciting way to grow wealth than investing in the stock market for the long term using a diversified portfolio. Before you join the ranks of rookie real estate investors who realize how much skill and luck are required just to break even, never mind actually turning a profit, consider the following realities associated with real estate investing first. Again, this is the opinion, but it's always good to hear a different side. When people tell me they want to invest in real estate, here's the scenario that typically envision. They receive a rent check with the first of the month every month, which is bigger than the mortgage payment on the property. They can use the check to pay the mortgage, cover all costs of homeownership, and then pocket the profits. It's possible to locate, buy, and manage a rental property that allows the dream scenario to come true, but it's not for everyone, and it's not nearly so passive an endeavor as many people imagine. Glad he pointed out it's not that for everyone. Unless you're prepared to advertise and find tenants and avoid vacancies, absolutely. Show the property to interested parties when seeking new vendors and renters and help them maintain it for current occupants. Vet applicants, ensure you have qualified, reliable tenants. Consistently update and improve the property so you can continue attracting high-paying renters. Respond to maintenance requests and coordinate repairs or do them yourself in a timely manner. Manage all the financial obligations from paying bills to land and security, handling security deposits, and more. Then playing landlord might not be the ideal for you. All this takes serious time and effort. This is just what you can plan for. Ask any seasoned real estate investor who manages properties with tenants about their unexpected list of duties, and they will tell you about repairs going massively over budget, evictions, and entanglements with the court system, or other rentals going wrong horror stories. I like that. And again, I think it's a very good article because I think we're possibly going to strong chances for a recession, if not this year, sometime next year. And people who might find themselves in a situation where they need more cash, or this the property itself, where they thought was going to be something for passive income, could become a serious issue. And it's just a good idea to see the side. Or if you're looking to say, well, I want to get in real estate, this article is at least point you in some direction and gives you just as much information as possible. Of course, you could just outsource the headache and use a licensed property management company. That's a viable option. See, I'm glad he pointed that out. He's pointing at it. And one that made serious real estate investors use, but at least even less more for profit, considering standard property management fees can run 10% of your monthly rent. That's true. Compare all this investing in the market when you may not have to do any work at all if you set up an automated contribution to your investment accounts that runs on the same day of the month every month. comparing it to stocks. Just because it's a house doesn't mean it's a good rental. That's a good point. Again, none of this is to say that you can't make money by purchasing a real estate and then renting out the property to earn rental income. That's not the myth. The myth is that anyone can do this with any property they buy and offer for rent. Okay. Unfortunately, it's not quite so simple. Learning to evaluate the investment potential of a rental property is far more involved than most people who simply want to buy a single-family home they personally enjoy living in tend to think. While there are some simplified formulas, such as the 1% rule, which suggests that rent you could collect from a rental property needs to equal 1% of the purchase price of the property for it to be a good deal, they are too generalized to be hard and fast rule for success. That's especially true in unusual real estate markets like we've seen over the past 2 years. Bloomberg recently reported that in the third quarter of 2021, the median price of real estate investment properties was $438,770 per month. Per month, real estate properties were $438,770. Using that 1% means you need to charge $4,400 per month in rent on that property. Most markets won't support that kind of rent from a mid-sized single-family home, and that's just a simplified calculation. It doesn't take into account any of the other factors you need to properly evaluate before you determine whether a specific property is a good candidate for investment. So yes, you could buy a $400,000 plus home and rent it out, but if the whole idea of real estate investment is that you can earn a return, you might face an uphill battle that makes that not happen. Again, this underscores the fact that buying a real estate is not to take it to fast, easy cash. Number 3, if you really want to invest in real estate, you probably don't want to live there yourself. The back of the napkin math for determining what can work for rental also doesn't account for the scenario we see a lot of people talk about when they say they want to invest in real estate. What they actually want is to buy a vacation property, use it themselves for a portion of the year, then rent it out when they're not personally using it. What they consider is the fact that a home they personally want to live in or use is likely going to be much more upmarket than a home an actual real estate investor would consider for purchase. The higher the price of a home, the harder it is to actually realize a potential positive return. And while vacation rentals can do brisk business if you want to use the house for yourself during peak seasons, you're going to have a hard time renting out the home for a prime price, filling vacancies during off seasons of both. Remember, seeing rental payments come in does not equate to automatic profit. Determine if you're truly earning a return on your property that is equivalent to or higher than what you could expect through a diversified portfolio invested in rare mutual funds and ETFs. You have to calculate your total internal rate of return, which requires you take into account all counts of ownership, not just the top line numbers on your mortgage statement. Buying real estate could be a distraction from your actual goals. Many clients tell me they want to explore buying real estate as a way to grow their wealth, until I ask a very simple question: is managing a portfolio of rental property something you actually want to do? With demanding careers and growing families, the last thing most of our clients have is abundance of time, energy, and hundreds of thousands of dollars floating around begging to be used by another house. Managing either the landlord role or handling a relationship with a property manager is typically not what most people want to take on, because it has nothing to do with their stated values, priorities, and goals. In fact, buying real estate requires significant capital. That is so true. It often detracts from the other goals they have. It also could take away from an overall long-term investment strategy if it leaves you crash-strapped and unable to invest in the market. Remember, you can invest in real estate through the market via REITs or real estate investment trusts. Only you can answer if committing to a real estate portfolio is good use of your time and money, and it's worth taking money away from other goals in order to fund this endeavor. Real estate investment requires a team of good professionals. Absolutely. Bloggers and podcasters tend to make real estate investing sound deceptively simple, so it's easy to think you can handle it all on your own. But the reality is that real estate investing is complicated. There are legal and financial dynamics at play that will require a team of trusted professionals to help you protect yourself and your investment. We live in a lawsuit-happy society, which makes it critical to protect yourself and your assets from potential liability. A knowledgeable insurance broker and a trusted real estate attorney are non-negotiables for real estate investors. If something goes wrong with your tenants or your property, you want these folks in your corner. The financial landscape in real estate investing is not the same as it is in your personal finances, so having an accountant, tax professional, and financial advisor who are skilled in terrain are also critical components of a well-oiled real estate investment machine. It is important to the success of new real estate investors to build and nurture these kinds of relationships. Real estate investing as passive income, know what you're getting into. Yes, real estate investing can be profitable, and after putting a lot of hard work in front and end, it may be able to provide some passive income at some point in the future. But that's very far cry from a guarantee. It requires a significant amount of luck and skill to achieve that outcome. What real estate investing is not a quick, surefire, easy, and foolproof method to earning huge returns on your initial purchase. Unless you feel very passionate about investing in real estate and are willing to devote time, energy, and money into such a massive project, you're probably better off building your assets through other avenues. Otherwise, it's too easy to find yourself working hard to break even at best. With all big financial undertakings, it's best to be fully informed. Maybe the trade-offs are worth it to you. That's great, as long as those trade-offs fit into your big picture. Either way, when you know the truth that real estate investing is rarely passive, you at least know what you're getting into. Without the order, he's a certified financial planner and investment advisor. Great article. Thought it was worth the time. Definitely, if you're looking to get into real estate, it's one to pay attention to. He did cover more avenues, and again, it's going to most certified financial planners it's not unlikely that they would talk about investing in, diversified portfolio stocks beyond mutual funds. Some of them get paid that way. A lot of them do get paid that way, so they're going to take the other side. But again, it's definitely worth your time to read the article, and whatever I might have missed up or jumbled up the words, pay attention to it. If this video has been any value to you, so please subscribe, leave some comments, and to my next video of Information Age Financial Solutions. I'm out.